Meanwhile, the International Monetary Fund downgraded its growth projection for the year after the war in West Asia triggered a major oil shock. And this is in line with the latest projections from the World Bank. The international body said that the possibility of a recession will become a reality if the conflict drags on and the already damaged energy infrastructure takes more hits. While global gross domestic product is now expected to rise 3.1% this year, as compared with 3.3% predicted in January. However, U.S. Treasury Secretary Scott Bessent dismissed the IMF's growth warning. Bessent said that the underlying U.S. economy remained strong and that growth could still exceed 3 or 3.5% this year, despite the Iran war hit. The Treasury chief said that the cuts in global growth forecasts and higher inflation projections by the IMF and the World Bank was an overreaction. Top U.S. banks, including J.P. Morgan, have been warning of a stagflation risk due to the war. However, Bessent, citing the latest factory gate inflation coming in modest, dismissed those stagflation worries. The Treasury Secretary also said that U.S. tariffs could be back in place to previous levels by July. The Supreme Court ruled in February that President Trump overstepped his authority in imposing sweeping global duties under an emergency law. Bessent's remarks come as Trump's chorus-singing administration is looking for options to keep the announced tariff rates. While the war has raised oil prices and shaken markets globally, it has led to the blockade of the Strait of Hormuz. Roughly 20% of global oil and natural gas exports are shipped through the Strait of Hormuz, and that has led to a historic energy crisis, weighing on economic growth projections. The IMF cut China's growth to 4% for 2027, which is well below the average 5% target over the past few years. But the lower projection aligns with Beijing's lower growth target announcement. On the other hand, India continues to shine in a cloudy global environment. The Global Fund once again raised India's growth forecast despite the Iran war hit. IMF predicts that India will grow at 6.5% this year and next. The fund cited a reduction in additional U.S. tariffs on Indian goods from 50% to 10% as a reason for the upgrade.